Hi and assalamualaikum everyone. So today I will start with the introduction of the company. So it provides an in-depth analysis of the financial performance and position of Maxis and Celcom, two major players in the telecommunication industry in Malaysia. And Maxis has emerged as a leading telecommunication provider in Malaysia and has made significant investment in state-of-the-art infrastructure. And Celcom has built a substantial customer base and is known for its commitment to technological advancements. And the analysis will provide a comprehensive understanding of the company's market positioning and their ability to adapt to the ever-changing telecommunications landscape. And by comprehensively understanding the financial dynamics of this company, stakeholders can make well-informed decisions regarding investment, partnership, and market strategies. And next is Maxis background of company. Maxis is a well-established Malaysian telecommunications company with a rich history dating back to its founding in 1993. And Maxis has emerged as one of the country's leading players in the telecommunication industry, providing a diverse range of communication services to individuals, businesses, and enterprises. And next, Maxis began its journey as Malaysia's first GSM mobile operator, and it has since evolved to meet the changing needs of its customers. Today, the company operates on multiple mobile technologies including 2G, 3G, and 4G LTE, and it is actively developing and deploying 5G networks. And next, Maxis takes pride in its comprehensive suite of services, which includes voice calls, messaging, mobile internet, data plans, roaming capabilities, and delete solutions for businesses. The company's offerings are intended to meet a wide range of communication needs, empowering individuals, businesses, and corporate clients alike. And next, customer satisfaction is a top priority for Maxis, and they have embarked on digital transformation journey to meet the evolving expectations of their customers. Through personalized experiences, digital services, and value-added solution, Maxis aims to enhance customer engagement and provide a seamless digital experience. Last but not least, Maxis places a strong emphasis on corporate social responsibility and actively participate in initiatives that contribute to the company and promote sustainable development. They have initiatives in education, environmental conservation, and digital inclusion to create a positive impact on society. Next, I will continue with the Celcom Axiata Berhad background company. Celcom Axiata Berhad, commonly referred to as Celcom, is a prominent telecommunications company in Malaysia. With its establishment in 1988, Celcom has become one of the key players in the telecommunication industry, offering a wide range of mobile communication services to individual consumers, businesses, and corporate clients. Next, Celcom takes pride in its diverse portfolio of mobile communication services designed to cater to various customer needs. Their offerings include voice calls, messaging, data plans, and value-added services. And next, to support its services, Celcom has invested significantly in its network infrastructure. They operate on multiple mobile technologies including 2G, 3G, 4G LTE, and have started venturing into 5G technologies, same as Maxis. And next is customer centricity is a core value for Celcom, and the company constantly endeavors to meet evolving customer expectations. They offer personalized experiences, innovative digital services, and value-added solutions to enhance customer engagement and loyalty. Lastly, Celcom actively engage in corporate social responsibility initiatives making a positive impact on society. They also participate in initiatives focused on education, environmental conservation, and digital, contributing to sustainable development and community welfare.
For the liquidity ratio, Celcom at 2020 and 2021 current ratio, Celcom 2021 decreased to 48 cents, meanwhile it's increased in 2020 which is 60 cents. For the quick ratio, Celcom in 2021 increased 4 times covering their current liability, better than 2020, and for cash ratio, Celcom in 2020 increased 12 cents which is better than 2021, it's only 6 cents. Profitability ratio Celcom 2020 and 2021. Profit margin Celcom 2021 generate 3 ringgit 8 cents, meanwhile in 2020 they generate 3 ringgit only. Second is return on asset. The assets Celcom from 2020 and 2021 generating are same, which is 40 cents per investment are earned in profit. And for return on equity at 2020, shareholder earn RM2 ringgit 1 cents for their investment, which is better than 2021. Asset management ratio Celcom 2020 and 2021. Inventory turnover Celcom sold and restocked the entire inventory about 15 times during that year. Meanwhile, in 2020, they sold and restocked 11 times, and the day sale in inventory was on the shelf 24 days in 2021 and average of 32 days in 2020. For receivable turnover Celcom 2020 and 2021, collect payment on credit about 1 time per year, and day sales in receivable customer have 310 days to pay their credit purchase for both year 2020 and 2021. And total asset turnover unchanged for year 2020 and 2021. Solvency ratio Celcom 2020 and 2021. Celcom at 2020 debt ratio is 0.92, higher ratio which is more risk indicate that at 2020 Celcom highly leveraged, meanwhile in 2021 they less dependent on leverage, and at 2021, interest year earned 16 times, which is easily to Celcom pay interest expenses on outstanding debt than in 2020, which is only 14 times. For the cash coverage ratio, Celcom in 2020 is RM93, which is better to generate cash from operation than in 2021, which is only 28 ringgit. Market value ratio Celcom 2020 and 2021. In 2020, 15 cents, which is more higher earning for each common share held. Meanwhile, in 2021, only 40 cents. For price to earning ratio, investors are willing to pay for shares of stock only 29 cents for 2021, which is not much different from 2020 with only 28 cents. And for earning to grow ratio, net value that Celcom found at 2021, which is RM 448 and 47 cents, not too much different as of 2020, which is RM 446 and 46 cents. Lastly, for 2020 and 2021, the Celcom market to book value remain unchanged, which is 7 million.
So for the next company is Maxis company, which is on year 2020 and year 2021. Basically, liquidity ratio consists three ratio, which is current ratio, quick ratio, and cash ratio. So for the first one, current ratio analysis is current ratio Maxis on year 2020 is RM 63 cents. Meanwhile, it decreased in 2021, which is 48 cents. Next is quick ratio. Maxis in 2021 decreased 48 cents times covering their current liability, which is better than 2020. For the last one is cash ratio. Cash ratio Maxis in 2021 is increased 19 cents, which is better than 2020. So next we have profitability ratio. The first one is profit margin. Profit margin on year 2021 generate 14 cents, meanwhile in 2020 they generate 15 cents. The next one is return on asset. The asset mixes for year 2020 and 2021 generating the same, which is 6 cents per investment in profit. The last one is return on equity. At year 2020, shareholder earned 20 cents for their investment, which is better than 2021. So after that is asset management ratio. And there is no record in report for inventory turnover and days sales in inventory. So we will move to receivable turnover. So for the receivable turnover analysis, Maxis on year 2020 and year 2021 collect payment on a credit about one time per year. Next is days sale in receivable. Customers have 38 days to pay their credit purchase for year 2020 and 36 days on year 2021. The last one is total asset turnover. For total asset turnover is unchanged for year 2020 and year 2021. Next, we move to solvency ratio. Solvency ratio consists three ratio, which is debt ratio, time interest earned, and cash coverage ratio. The first one is debt ratio. The analysis is at year 2020, debt ratio is 0.32, higher ratio which has more risk indicated at year 2020. Maxis highly leveraged meanwhile in year 2021 they less dependent on leverage. Next is time interest earned. At year 2020 and year 2021, interest earned only 3 times, which is easy to Maxis pay interest expenses on outstanding debt. The last one is cash coverage ratio. Cash coverage ratio Maxis in year 2020 is 6.95 and year 2021 is 7.11. So the last one is market value ratio. It consists four ratio, which is the first one is earning per share. The analysis is in year 2020, they only earn 62 ringgit and 82 cents, which is more higher earning for each common share held. Meanwhile, in year 2021, they only earn 57 ringgit and 50 cents. The next one is time to earning ratio. The investor are willing to pay for shares of stock only 37 cents for year 2020, which is not much different from year 2021, which is only 39 cents. After that is price or earning growth ratio. The net value that Maxis found at year 2020 is 7,211 and 11 cents. On year 2021 is only 10,823. The last one is market to book value. For year 2020, the Maxis market to book value is 0.8 and year 2021 is only 0.87.
After we analyze these two companies, we find that Maxis has better liquidity and short-term solvency than Celcom. Second, for profitability ratio. As far as profitability is concerned, Celcom is outperforming Maxis. Celcom gained RM3 ringgit in 2020 and 2021, meanwhile Maxis only generate 50 cents and 40 cents for year 2020 and 2021. And for asset management ratio, Celcom is more efficient at managing its inventory, while Maxis seems doing better job of collecting its receivable and utilizing its total asset in generating revenues.
And next is for the solvency ratio. So for both company, we can conclude that according to the general notion, a Celcom company whose solvency ratio is higher than 20% has a good financial health and can pay off its debt in the long run. However, Maxis companies whose solvency ratio is below 20% can be considered financially stressed. So the analysis for both company for market value ratio is the ratio seems to indicate that the investor in both firms seems to have good expectation about their performance and therefore paying fairly high prices relative to their earning book value.
Hi, my name is Nur Fatin Umaira binti Amri. So, a pro forma balance sheet is a tabulation of future projections and can help your business manage your assets now for better results in the future. it can assure that there are no surprises in the future when it comes to paying our bills, getting return on investors, and keeping our inventories in stocks. So here are our balance sheets for Celcom company. So the total for non-current assets is 6,417,201. For the total current assets is 1,422,614. So total assets for non-current and current assets is 7,839,815. So for the non-current liabilities, which is loans and borrowings, deferred tax liabilities, and also other liabilities, we got the total for non-current liabilities is 4,274,934 ringgit. So for the current liabilities, which is trade and other payables, contract liabilities, derivative financial liabilities, loan and borrowings, income tax payable, so the total is 2,923,070 ringgit. So for the equity, which is share capital, we minus with retained earnings, we get the total is 632,811 ringgit. So the total equity and liabilities, we get 7,839,815 ringgit. So I will pass to the next presenter, Proforma Income Statement.
Hi, Assalamualaikum. I'm Norzusna binti Nur Azmi and I'm going to explain more about the Proforma Income Statement. Proforma Income Statement is a document that is a way to show the company's income if we exclude the costs. These statements are logical assumptions and financial forecasts that are a useful tool for investors, startup businesses and key decision makers to look at a company's future financial. So for our report, we choose two companies, which is Celcom and Maxis, and we decided to choose Celcom to forecast their income statement. For income statement, we need to choose 2 years, which is 2020 and 2021. For the 2020, their net sales is RM6032251, while their gross profit is RM56222837. And total operating expenses is RM328738. So for the net income, we need to add net sales and gross profit minus total expenses, and the net income is RM651505068. While the pro forma income statement Celcom for 2021, their net sale is RM6240442, while their gross profit is RM5717243, and lastly, their total operating expenses is RM2913359, and their net income for 2021 is RM3965989.
Hi, my name is Nunazatu Izati. So I will present about a recommendation. So the first recommendation is to improve liquidity management to increase the current ratio. So to enhance liquidity, Celcom should focus on managing its current asset liability effectively. So this can involve strategies such as optimizing inventory level and negotiating favorable payment term with the supplier, and closely monitoring account receivable to reduce outstanding balance. So by increasing the availability of current assets such as cash, inventory and account receivable, Celcom can improve its current ratio and ensure it has sufficient resources to meet short-term obligations. So next is focus on enhancing cash reserves to improve the cash ratio and cash coverage ratio. Celcom can achieve this by implementing measures to enhance cash inflow, such as improving cash collection processes, negotiation favorable payment term with the customer, and exploring opportunity for working capital optimization. So the company should evaluate its cash outflow and identifying area where expenses can be reduced or managed more efficiently. So by increase the cash ratio and cash coverage ratio, Celcom can strengthen its ability to cover short-term obligation with readily available cash. And next recommendation is continue improving profitability and profit margin. So to enhance profitability, Celcom should focus on revenue growth, cost management, and operational efficiency. This can involve strategies such as expanding customer base and introduce new product or service, optimizing pricing strategy, and identify area of cost reduction or process improvement. So by increasing profit margin, Celcom can generate higher return on each unit of revenue and improve its overall financial performance. So the lastly recommendation is adapt to digital transformation. For the pandemic has highlighted the importance of digital transformation. So Celcom should prioritize investment in innovation technologies, platform and service to cater to changing consumer need and drive revenue growth. With the increasing reliance on digital connectivity during the pandemic, so there is significant demand for innovative solution in areas like a mobile application, cloud computing, and cybersecurity. So Celcom should invest in research and development of digital service and solution to cater to shifting market demand. Okay, for the conclusion, Celcom is a leading telecommunication company in Malaysia that provide various communication service to its customer. Celcom financial performance from 2020 and 2021 show improvement its current ratio, cash ratio, profit margin, and earning per share, but common stockholder earning per share dropped. And Celcom market value per share was 29 cents, but investors were still interested. They were able to sell and restock inventory like 15 times more frequently in 2021 than 2020. And their asset turnover stayed constant throughout the 3 years. So the from previous study have shown difference in the financial performance of company before and after COVID-19. So for the Celcom performance in 2000 and 2021 was inconstant, but it managed to keep its assets turnover rate steady and increase its profit margin. Additionally, Celcom improved ability to cover its current liability more than offset the decline in earning per share. So despite the difficulty caused by COVID-19, because 2020 and 2021 is COVID-19, so Celcom has maintained its operational stability and effectiveness. So Celcom financial ratio and metric between 2020 and 2021 show mixed performance, but it has demonstrated its ability to remain stable and efficient. It is important for company like Celcom to continue adapting to mitigate the effect of COVID-19.